how to buy a house and make it pay for itself. Owner-occupy or house hacking, or even BRRRR method. How to buy a house and make money off it too. How to be smart when purchasing a house. And I really want to see more women in the real estate. Hey, I went through immigration, so this is easy, believe me. Important. This is my biggest recommendation towards financial freedom in general. Smart cookie. This ain't just pretty, y'all, okay? Hi everyone, my name is Karina and self-made is my middle name. Today I'm wearing this foliage dress to match the fabulous New England foliage outside my window, which you might or might not be able to see. Welcome! So here I am standing in my beautiful new home, which I will happily show you around in my future videos. But today I'm kicking out a new series of my videos here on educating potential home buyers like you on how to be smart when purchasing a house and making probably your biggest investment to date. Yes, I call it an investment. My house is an asset, not a liability. And if you stick till the end of this series, you will learn how to buy a house and make money off it too. So stay tuned. I immigrated to the USA 6 years ago with nothing, and today not only am I the homeowner but also a landlord, or as my friend likes to say, a landlady. How did I do this? One word: research. Lots of it. I did it all by myself and it wasn't easy, but I'm happy to help and that's what I'm here for. In this series, I'm sharing with you what I learned along the way, as well as the mistakes that I have made that could have been easily avoided if there was a video like this for me to watch beforehand. Most of the resources out there talk either about how to buy a home for yourself to live in or how to buy a rental property. And I thought, what about combining the two? Smart cookie. This ain't just pretty, y'all, okay? Yes, this is exactly what I did, and this is how I live in my beautiful house, mortgage-free, roommate-free, rent-free, making profit, and all of it while building equity. Sounds like a win-win to me. I did all of this because it made sense to me, only later to find out that this is actually a technique called owner-occupy or house hacking, or even BRRRR method, which stands for buy, rehab, rent, refinance, repeat. And it's awesome. I will tell you all about it in my future videos, but today's video is for anyone out there who is curious about buying any property any day for any use. The process is the same. Are you on the fence on whether you should be buying a house at all? In most cases, the answer is yes. And in this series, I will teach you how to buy a house and make it pay for itself. So let's get started with 10 steps towards home ownership. And in this video, we're gonna talk about first 3 baby steps that you can start doing today. So let's begin. This initial step that I'm going to talk about, in my opinion, is one of the most important, even though I never, ever hear anyone talk about it. Visualize. Dream big. No matter how broke you are at the moment, how bad your credit is, how deep is your debt, what no one can take away from you is your ability to dream, control your thoughts, fantasize, and eventually manifest. Here are a few things that I have been doing way before I could afford anything. Imagine yourself living in your own dream house. It doesn't have to be a perfect house, but it will be your own one day. Always look at the real estate section in your local newspaper, or even when you travel, just to understand what's out there and how things work in different states, for example. This is exactly what I did, kind of subconsciously. It was never like a technique that I used. I couldn't not do it because I love real estate so much. So even when I was a performance artist in New York City making 20 grand a year, I always knew what was up in the New York Times real estate section. This stuff works. Window shop online. I think definitely a great idea, a great way to put your desires out there and just to fulfill your curiosity. Nobody even has to know you're doing that. I find it so much fun to just browse online on the websites and look what's out there for sale, for rent. You can go on Zillow.com. I think this is the most universal website in the USA. There are hundreds and thousands of them, especially in those moments when you might be tired after a long day and you just want to browse something online. I find this to be a much more healthy way to spend time or kill time, if you want to say, rather than watching some mediocre TV show. And finally, attend the open houses. Even if you have $20 in your bank account, I don't care, no one can stop you. Just be nice and polite and show the universe that you're ready. In fact, I bought my first property only because I met a realtor at one of the open houses that I attended exclusively for fun, to kill time in a town where I didn't know anyone and I literally had nowhere to go on a Sunday afternoon. And look where it got me. Do it. No personal viewings at this point though, before you're ready to actually buy a house, because that would be stealing time from your realtor, which is a very precious resource. And the way life works, when you steal a resource from someone, that will invite someone else to steal another resource of yours, like money. But watch out, we can't let that happen. We need that money for down payment, girl. So be fair. Also, looking at the actual houses will help you understand what is it you actually want versus need, or neither. Write down your criteria. The more you see, the more you know what you're looking for, and that is good for you and your pocket. Step number 2, get your finances in order, girl. You have to be ready. Don't buy a house if you're living paycheck to paycheck. In my future videos, I will share with you how I dealt with this by changing careers and getting into tech, which is a very creative job, by the way, and went from making 20 grand a year as a performance artist in New York City to being a landlady in just a couple of years. Whatever job you do, you deserve to be paid handsomely for it if you do it well. And now I will show you a few ways to improve your finances on paper that you can start doing today. Of course, credit, your credit history and credit score. Remember, the higher your credit score is, the better rate you might get in the future. Work on your credit score. It is easy. You don't have to make a lot of money to have a perfect credit. It's not about how much you make, it's about how you spend it. So do it wisely. Stay on top of it. I check my credit score weekly, sometimes daily, sometimes even multiple times a day, and so should you. Set up the alerts that inform you of any changes on your credit report. If I wake you up in the middle of the night and ask you what your credit score is and you can't tell me, you lost. Get with the program, people. This is important. Next is save, and this includes having an emergency fund set aside for you and also saving money for your future down payment. Ideally, in a perfect world, your emergency fund would cover from 6 to 12 months of your living expenses, and for your down payment, I recommend saving around 10% of your future house price, which will include 5% for the actual down payment and also money to cover the closing costs and also money for some wiggle room. And debt. Debt is totally normal to have. Sometimes it's good to have. What is bad is to have too much debt. So get out as much as possible of any high interest loans that you might hold. High interest are considered 5% plus, which a lot of student loans are like. This is not a requirement, but it definitely helps. It will help you both financially and mentally in future. The less debt you have, the more empowering you feel. That especially applies to the ladies out there. And I will also share a very personal tip with you here: minimalism. This is a huge mentality shift for me personally that helped me tremendously to up my financial game forever. I started treating money completely differently once I became a minimalist. How minimalistic approach to life changed my financial game forever is a topic for a whole other new video that I will definitely make for you. But for now, just want to say, look into it and train your brain to immediately separate necessities from luxuries, and I don't mind luxuries are great sometimes, but just clutter. Get rid of clutter. A lot of your financial expenses are also directed towards clutter. This is how our society is built. This is how they want us to spend money. So build that barrier and start separating, start scanning and seeing your money's worth. This will help you tremendously to get out of debt, fix your credit, and start saving, believe me. But meanwhile, we will discuss financial matters in a deeper detail in our next step number 3. And step number 3, when your finances are ready and you are ready, go ahead and get your pre-approval letter from the lender. This is your first big step in the process. However, there is no commitment really at all at this point, and this is 100% required, non-negotiable. I am saying that because this was one of the biggest mistakes I made in the process. I started working with the realtor and looking at the houses before getting pre-approved. What happened is I saw this house, fell in love with it madly, but because I was not pre-approved, I couldn't make an offer fast enough, and it was sold to someone else in a snap. It took a lot of witchcraft to bring it back to the market, people, if you know what I mean. No, but seriously, jokes aside, this cost me a lot of stress, and it could be easily avoided if I follow this rule. Benefits of getting a pre-approval letter are countless. First of all, you will look more serious to the agent and the sellers. You will be able to make the offer fast, put the earnest money down, which I will be talking about in the future videos, and be officially in the game. At this point, definitely shop around for the lender. Feel free to try several. Some lenders might not even do a hard pull on your credit, which is great. Some of them will, which is also fine. Don't let that scare you. Be honest and transparent and tell them that you've been shopping around for the mortgage. The only thing it does for you, it just shows the lender that you are serious about buying a house, which is great. Even with multiple hard inquiries on my credit, I was still able to get a great deal eventually, so don't fret it. Every lender will have a different choice of loans to match you with, and you have no idea what your options might be until you put yourself out there. My personal recommendation is to use local credit union or local mortgage company versus a big corporation or bank. This way, you are more likely to get a better deal while supporting local businesses, which is great. All right, let's get into this. In the pre-approval process, your lender will be looking at the following factors. Of course, your credit. I would say 620 is the minimum score you need to pass, and the perfect one would be 740. It's good to have up to 3 credit lines in good standing, and make sure you have no late payments, at least in the last year. And like we discussed in the previous step, this all can be done way ahead. Once you fix your credit and bring it to a somewhat normal point, then it's so easy to maintain it. Next important factor here is, of course, your income. Specifically, your lender will be looking at your employment history. It is highly preferred to have at least 1 year of you working in the same job, in the same role, in the same company, or at least a couple of years in the same industry. Basically, what your lender needs to see is that you have a proof of at least 2 years of consistent line of work, and in a way that lets them safely assume that you will be able to continue this line of work for 3 years or more. I personally was in my company and in my role for only 1 year when I applied for mortgage, but I have been in the industry for 3 years by then, and that was good. Another important factor is income changes. I put here increasing income because this is a best case scenario. What happens is when you provide, for example, your last 2 years of tax returns, the lender will look at your income in each year and compare them. If your income has been increasing, the lender will average them and look at the average income, which is fair. But if your income has decreased this year from the year before, then the lender will look at the lowest income, which plays against you. So make sure on your tax return that your income either stays the same or even better if it grows. And the last item I put here is documents. This is obvious. Of course, you need to have everything ready, be very organized. You will be asked to provide your W-2s, normally for the last 2 or 3 years, W-2s, 1099s, tax returns, also recent pay stubs and bank statements. Have all of it ready. If you ever rented an apartment in New York City though, this is easy for you, girl. You got this. Booba! Boobachka! Next factor in your pre-approval process is of course your debt, which is not necessarily bad. We all know there is good debt and bad debt out there. My only advice to you here is, of course, if you can, pay off your debt as much as you can, especially the one with high interest. Like we talked about previously, it is considered any loan with 5% of interest or more. And like I mentioned, this will help you not only financially, but also mentally, just to get that out of your head. This is totally not required, obviously. It is fine to have a student loan. It is totally okay. Just make sure you're not behind on it. Next important factor here is debt to income ratio, which is calculated based on your gross income, your before taxes pay, and it should be ideally under 36%. It's fine to have it under 41. Some sources even say that 43% is going to work and might still get you pre-approved, even though to me personally this sounds like pushing it a little bit, but you do you, girl. This is how you calculate it. For example, your student loan combined with your car loan makes $900 a month, and your gross income before taxes is $3,000 a month. When you divide 900 by 3,000, it gives you 0.3, which means your debt to income ratio or DTI ratio is 30%. And you're good to go. And finally, the last but not least factor in your pre-approval process will be your assets, which could be your cash, savings, money you put away in your savings account, saving up for your emergency fund, and mortgage down payment. Remember we talked about it? It could also be your cash equivalent, and that includes quite a few things. This could be your stocks and bonds, as well as money in your 401k account or IRA account also counts as your asset. This is what I learned during this process. So that is great. Of course, another huge asset of yours would be other properties, but I don't expect you to have any yet if you're watching this video. Here is the great loop into this whole mortgage system that once you get your first property, even if you still have a loan on it, you can already use it as an asset to buy your next property, and so on and on and on. And this is how you become a real estate investor, ladies. So based on all of these factors, your lender will be able to match you with a loan and issue a pre-approval letter. And like I said, before you put yourself out there, you will never know what options you might have. They even have sometimes special offer deal for the specific income bracket that you might fall into. It was fascinating, the options I was offered. Your pre-approval letter will state the highest price of the house that you might be able to get a loan for. not the house that you can realistically afford. This is for you to decide and you only. Not for your lender, not for your realtor, no one but you. Please remember that. I feel like a lot of people fall into this trap. They see that they've been approved for $500,000 house and they're like, woohoo! Disneyland, let's go and get ourselves $500,000 house. No, don't do this. Go lower, and please remember to give yourself lots of wiggle room there. Ideally, your monthly payment towards your house should be no more than 28% of your gross income. In a perfect world. But you know what? Technically, even my payment is higher than that. But because I found a way to cover my mortgage expenses and actually make money off my house, this doesn't matter anymore. And I will tell you in my future videos how I am doing that, and you will see why and might be able to do the same. For now, just keep in mind that on top of your principal and interest, you will also be paying property taxes, which is a lot of money depending on the area. Sometimes it's crazy a lot of money. You will also be paying insurance, both home insurance as well as your PMI, which is private mortgage insurance, that will apply to you if you put down less than 20% down payment. You will also pay all utilities for the house, which is more than you've been paying while renting. Normally renters pay just gas and electrical. You will also be paying water and garbage removal, snow removal, as well as all the maintenance and repairs costs. I'm not trying to scare you, it's actually not bad at all. Just keep that in mind, you have to budget in for that. My advice to you is try to not jump too much higher than the rent you have already been paying. And oftentimes you won't need to if you stay in more or less the same living conditions. For example, I got approved for $440,000 loan, but I bought a house for $350,000, which lets me live comfortably and keep saving and investing money more easily. Important. This is my biggest recommendation towards financial freedom in general. Do not get fooled by high amount loans, large credit lines, free money, sales, deals, raises and promotions. Keep your feet on the ground. None of these factors mean that you have to now upgrade your life and buy things that cost more. Absolutely not. For example, your iPhone 8 is perfectly fine. As well is probably perfectly fine for you to live in a 2-bedroom apartment. You don't need to buy a 5-bedroom house. Who are you trying to impress? Be smart with your money. Spend it very wisely, save it and invest. Spend your money wisely according to your needs, not to what advertisers tell you might need. I am a strong believer that personal finances and the insights that I'm sharing with you today should be taught at school. But unfortunately, they're not. So thank God for YouTube. Please show some love by liking my video, sharing it, and subscribing to my channel. Leave me a comment down below and share with me where you are in the home buying process and ask me any questions you have. I have learned so much in this process that I can't wait to share my knowledge with you. And one of the biggest things I learned, girl, is it's a man's world out there. And I really want to see more women in the real estate. More immigrant women like me, more women of color, more women ex-Fox. Stick with me and I will teach you how to do it and put yourself out there. And remember to hit the notification bell next to the subscribe button as well, so you get notified when my next video comes out. In my next videos in this series, I will be showing you all my house paperwork here, sitting down and going with you through it. Hey, I went through immigration, so this is easy, believe me. I will also share with you the spreadsheets that I created to track my searching process and compare houses between each other based on potential profit, as well as how I saved myself $13,000 by sitting down one day for a few hours and running some formulas in Excel while choosing the right mortgage for me. Thank you for watching this video till the end. Here I outlined for you my 10 steps to buying your first home like a boss and eventually leading you to the financial freedom that you want. Yeah, that you all want, I know. Today we went through the first 3 steps: visualize, get your finances in order, get pre-approval letter. Next time we're gonna start with step number 4, how to choose the right realtor and avoid some mistakes there. Then how to search for the house and how to become a walking calculator, as I like to say it. I will share with you the spreadsheets that I kept, tracking every house's pros and cons, comparing them together, crunching those numbers together to see what makes sense and what doesn't. Next, we will go through offer and negotiation and everything related to that. And in the video after that, we will talk about mortgage. Super important. I saved myself tons of money by choosing the mortgage that actually everyone out there argues against, and I will show you the actual living proof on why you should not listen to anyone else and make your decision yourself based on the research that you make, like watching my videos, for example. Next, we'll talk about contingencies, which will be your home inspections, your appraisal, and your finances, finally getting that loan. And after that, we'll talk about shopping for insurance and attorney and how that works, how you can save money there and still get the best service. And finally, the last step will be closing, which will also include everything starting from final walkthrough, going on through closing, and going on to planning ahead. And eventually, maybe even building your empire if that's what you want, girl. Thank you so much, and I hope you stay with me through the whole series so this can be yours. So cheesy. Thank you. Bye.